I'm super excited. So should I do some quick introductions for these guys? I think we just did it. All right, we'll just dive right in. I'm super excited to be here to moderate this panel. This is an industry that I'm super passionate about, to say the least. I hope we're able to answer any questions. We met offline before we started this panel, and we met through a Zoom call and even just in the green room. And we kind of vowed that we would try and make this interesting and a little bit energetic for you all. So I encourage the guys to kind of speak from a place of entrepreneurship, to speak from a place of kind of authenticity, and even, dare I say, vulnerability to some degree. So we kind of want to bring something a little bit real and obviously something of immense value. I had a front row seat to the FTX failure. I live in the Bahamas. My neighbors are actually SBF's parents. So I was there when CoffeeZilla had his drones flying all around, when Sam was arrested, et cetera. And that moment for me was, so I'm a resident of the Bahamas. I was very kind of defensive about some of the scrutiny that the Bahamas was put through, but I was also very defensive of our industry and what it was put through, and to some degree what it's still kind of put through. So two of the things that really kind of came up for me, and one of the questions that I want to just kind of pass down the line with the guys, is this word crypto, and I just kind of want to get this out of the way a little bit. It means different things to different people. I went through a full season of trying to avoid the word, but I don't even know if I'm right or wrong trying to avoid the word with my team. So we just kind of wanted to go down the line. What does the word mean to you? And we'll start with Herwig. We'll just kind of go down the line, and then we'll dive into some more specific questions about real-world assets and tokenization, distribution, opportunity, liquidity, all that stuff.
Thanks for that intro. Great to be here. My name is Herwig. I'm the founder of Security Token Group, most known for Security Token Market, STM.co. We're like coin market cap, tracking the different digital securities and RWAs and everything else that's out there. And crypto is a very polarizing word, for sure. And so I like to usually frame the narrative around who I'm talking to. So if you're already in blockchain or in crypto and you've bought Bitcoin, that word is less scary to someone who has never touched it and maybe all they've heard of is FTX, right? And so those tend to be, you can stereotype a little bit, but usually with a couple of quick questions, you can figure out their stance on crypto. And it is tough. I say polarizing because if you say crypto to someone who doesn't like crypto, they're not going to listen to you about what you have to say about tokenization. And so you want to make sure, I think, you get it right.
I'm Jamie Finn, president and co-founder of Securitize. We offer kind of infrastructure to create tokens that are securities, and always have been securities. For me, the word crypto actually means public blockchain, and that's where we see the most value being created, right? There's a lot of projects that are working on permission blockchains and things like that. We're not in favor of them. It doesn't take advantage of the crypto ecosystem and like everything that's out there around it. If you have to go and make your own wallets, make your own stable coins, get your own dApps, all that stuff, you've missed the point entirely.
Hey, Nadav here. Good to be here from INX. I think one of the challenges that we see is really education with security tokens. It's always like working on emphasizing and educating when we're having these conversations. What is a security token? Instead of just saying, closer? Okay. Using the word security tokens, and so I don't want to say that we're trying to avoid the word crypto at all times, but really emphasizing that we're talking about a security here, and it really differs from something that is unregistered and like crypto.
My name is Mitch Diarmando. So I'm at SteelWave, so we're a traditional real estate developer. I'm probably the youngest one there by a good 10 to 15 years. So crypto to me is what brought me into the space. I kind of see it as a next generation of capital that needs to be deployed. And on the real estate side, we're really striving to be on the front edge of that. We've been doing it for 40 years. It's all traditional rails. So it's a real shakeup, but I think it's probably going to be one of the most impactful things to happen to globalize finance, especially for hard assets. So.
That's awesome, guys. I appreciate it. It helps me a lot, kind of understand, how to position the word. Kind of, in my life, I know it's polarizing. I'll say the word sometimes. People will run out of the room. I'll say the word sometimes, like Jamie, we were just talking about, and you said that without the word crypto,
we wouldn't have a business.
you wouldn't have a business, right?
That's how we created the company. And I would say, to the folks that are going to run out of the room when you say the word crypto, they probably aren't the right people to be in the room to begin with. You have to understand what you're dealing with here. And like, the value is crypto. It's not blockchain. And people say blockchain, blockchain, blockchain. You're like, okay, yeah, but blockchain is just a method of, processing a transaction. Like, who cares?
Right. We went through this whole kind of phase of let's not say crypto, let's say blockchain. Then it was let's not say crypto, let's say security tokens. And I feel
I don't recommend that one.
Right.
That doesn't work.
Okay, so why?
Well, because people get obsessed with the format, and the format's irrelevant. It's really about the investment. And so if the investment's good, the format shouldn't matter.
Right. Herwig, do you have the consulting division of your business? Do you have people asking similar things? What should we call it?
Yeah, I think everything you're saying is correct, but we have to recognize that this is an adoption thing. That's where a lot of my company focuses on, and so we have to also target the people who are currently turned off by crypto, because this is a financial revolution regardless of the format, to your point. So when it comes to consulting, we really try to focus on the benefits of why are you doing this, not, oh, hey, this is a technology. I think in 2018, when this really first came onto the scene, everyone sort of thought ICOs, this is a great way to just raise a bunch of money immediately without really having to focus on the most important part, which is distribution, which is selling it, which is actually talking about the product, not because it's tokenized. So there was a huge hurdle with, I think, the industry across the board of having to kind of, convince people or educate them on the fact that this is a technology. It is not a distribution mechanism. It makes it easier to distribute products, but it's certainly not going to solve your liquidity or your fundraising problem.
Right. Okay, so let's dive into the technology. So we got the crypto piece kind of aside right now. Let's get into the blockchain question. A lot of projects that are raising money, trying to raise money, are kind of coming up against two groups of people. You have the VCs, and then a lot of the VCs want to know they want to understand what the retail customer wants. They want to see the solution to the problem that you're prescribing through the retail customer. How does this add value to the retail customer? A lot of the questions come down to whether if it's retail asking it or institutional asking it, is fundamentally why blockchain? I mean, it's almost like such a simple question, but it's so fundamentally important that we have good answers to this question. So again, I just kind of want to go down the row. Why blockchain? Why is it that everyone in this room, we're all here for the same reasons. We all have a common interest. Why is this question so important? It's been important for a decade, I would say. Is it getting more important? What's kind of coming up for you when you're answering this question? I'd just love to hear what you guys have to say.
I'm happy to kick it off. I think what most people think of when they hear blockchain is trustlessness. And when it comes to capital markets, that is literally one of the biggest problems. There's whole businesses made off of being the middleman and taking your piece of the transaction. So the idea that this technology can automate and remove a lot of these middlemen is exactly the revolution we're talking about. I think when you talk to crypto people, they get it right away when you can talk about atomic swaps and do instant settlement, which of course we know Wall Street doesn't operate on today. There's this concept of leverage where you can easily get a loan against your asset. These are all foreign concepts to anyone who isn't in crypto. And so there is a hurdle where at least blockchain or crypto, this is the educational gap we got to break through, because again, it's not just about tokenizing, it's about explaining, yeah, you can distribute your dividend to 1,000 people, 10,000 people for the same amount of work, as opposed to today where there's an example of a large fund, they have 70 finance professionals doing transactions. They've got 1,000 people in their back office supporting those 70 individuals. Those 1,000 people are going to shrink thanks to a lot of this technology.
Yeah, I mean, I think it comes down to like to echo what you were saying. It really comes down to security. I think that's one piece that crypto and public blockchains bring is security, and I think that's undervalued. We saw what happened in China where they had to stop trading treasuries. If you did that using this type of infrastructure, you wouldn't have had that type of issue. And so I think that's a crucial piece. The one thing that most people don't think about in the space is, because you mentioned lending, is provenance. So proving that somebody owns something and it's unencumbered is very difficult in the traditional world, especially in alternatives and kind of private placements and things like that. So that's a really important concept that enables things like lending, but that idea of provenance you can do a lot with.
Yeah, I totally agree. Nadav?
Yeah, 100% agree. I mean, on INX, our trading platform, SEC-registered trading platform, is 24/7, 365, for example. We wouldn't, like a big part of enabling that is transaction happening on the blockchain, happening very efficiently, transparency also. I mean, anybody in this room can come in, the SEC can come in and just see everyone's cap table live, just use an Etherscan, check everything out on the blockchain. That's unheard of. So a lot of the efficiencies and the things that really enable our platform is blockchain based.
Yeah, I mean, I completely agree with everything you guys said. For us, it's more so on the deployment side. You know, we're a private company. Our deal sizes span from 100 million to a couple billion a piece. So the people who are able to invest in those deals, it's a pretty select few people. You know, you can compare us to a private REIT in a lot of ways, but we're like the direct exposure of it, so it's each deal itself. So what blockchain did is it totally opened the door for us to really investigate and focus on finding this new capital. You know, internationally, I think you're seeing a lot of it, and we're trying to be on the front edge of that. But again, it's really opening up private markets, and that's where we're trying to be on the front edge of it.
Now, moving on to, and I'm going to kind of like build the questioning from a baseline level into some more specific things for the guys. And I mean, and we have some studs up here, you know, truthfully, we have from Mitch, who's actually out there building a project, to, you know, ATSs and, you know, consultants. I mean, it's pretty kind of a wide breadth of expertise that we have here. So the next question is kind of around blockchain and regulation. Some of you, even in this room, may or may not know, but there's been some really interesting language from a government perspective around NFT and tokenization through Uniform Commercial Code. Uniform Commercial Code, Article 9 and Article 12 were amended in 2022 and actually adopt now language around NFT, they say that, and tokenization. So, but you know, they don't say anything about blockchain in it, but it kind of alludes to it because you kind of can't have the NFT and the tokenization kind of without the blockchain. So now we have like a clear regulatory framework by which to kind of move forward and start to add credibility and very clear in the daylight kind of approach to the sustainability of this tokenization strategy, this digitalization strategy. So now the question is around blockchains, you know, specifically. You know, if you're a project, if you're building, how do you choose a blockchain? And I wouldn't ask, if there was any one of you from a layer one, I wouldn't ask this question, but no one is. So do you have a favorite blockchain? Or like Mitch, for example, like you're building right now, have you chose a blockchain to work on yet?
So we have not. And candidly, I think over the next couple months, you're going to start to see a lot more options come to the table. For us, we took the stance, we domiciled it in Bermuda, and we're like, look, we're going to traditionally raise the fund, but we're going to give the investor the option to tokenize whatever amount of their piece that they would want to. And I don't think that'll really happen for probably 12 to 18 months because we're going to be deploying and getting all the assets together. For me now, I mean, probably Solana back end, but it's bound to change pretty shortly.
Sure. Okay. So Nadav, Jamie, and Herwig, I'm going to hold you guys to it a little bit. Do you have a favorite blockchain? If you were building a project, would there be a blockchain that you would work on, or do you have, say, Nadav will go and we'll go this way. We'll start with you. We'll go Jamie, Herwig. Do you have? And I know I'm kind of like putting you on the spot, but we got to try and make this fun. So, like, if you were building and you weren't working at INX, and you had to build on a blockchain, what would it be? And maybe to make it a little more PC for you, is like a 1, 2, or 3. I can't resist.
I think, Ethereum 1404, the smart contracting aspect of it, enabling, just programming infinite amount of utility into the token. So I think that's a strong one. You can create fan-based tokens based on this different utilities tiers within your tokens as an issuer, as a company issuing the tokens.
You're speaking about security tokens.
Yeah.
Right now, I think that's generally
yeah.
speaking like where we're all coming from.
I would give you kind of a different framework, a different way to look at it, because it's kind of each one is fit to different use cases. So when we look at a blockchain, we like to make sure that there's enough infrastructure. So are there wallets? Do they exist? Are they easy to get? Are there custodians for the actual assets? Because these are securities, you got to custody them somewhere. Is there a stable coin, or do I have to make my own stable coin? Are there marketplaces that support it? Those are the questions you need to be asking and understanding, what to do there. We support a multitude of chains. We work with Avalanche, we work with Polygon, we work with Ethereum, Algorand, and any number of different chains. But we don't work with all of them. And all the ones we work with do check that list.
Yeah, I think that's a great way to put it. You need to have your parameters checked off for any blockchain for it to work with tokenization. The answer we would give our clients is twofold. One, going back to what Jamie said, this is, it's not necessarily about the underlying blockchain. There are already multi-chain securities out there today. So it is very likely that the future looks like that securities may live on multiple blockchains as opposed to just one. The other side of it is we look at it 3 ways. The first is technical, the second is community, and the third is incentives. So technical, that's when you want to get into the nitty-gritty of how does this work, the consensus mechanism, the infrastructure, does this work with the smart contracts that I may be building or that I'm leveraging? The community, right? This is a big component of, are there buyers? Are there people with wallets? Is there a lot of excitement behind this chain? Is there a lot of growth? Is there a big development community on top of it? And then last but not least, the incentives part, right? There are grants, there's marketing, there are VCs tied to a lot of these chains. You want to compare, and in a way, we advise you do a bake-off, right? You figure out and talk to all of them, figure out who's going to give you the best incentives, who's got the best technical infrastructure for you, who's got the community, and depending on who you ask, one of those may be a more driving factor.
And are blockchains, Jamie, I'll ask you this question. Are blockchains today moving towards creating infrastructure for security tokens more so than they have? Is there development there? Are they deploying capital?
Yeah, they're definitely deploying capital. And I think there's, we've seen Avalanche do subnets and Polygon do supernets, which are kind of these micro networks is sort of the idea behind it. So there's a push towards it. I personally, public blockchain, regular infrastructure, all the kind of bells and whistles that come with that, I think detract from the guy from Pudgy Penguins was talking about community, like it detracts from community. And if you're not going to be part of the community, then what's the point?
Okay, awesome. So we're going to switch the conversation now to real world assets. Putting real
That's so hard to say.
It's so hard to say?
Yeah, every time you talk, you're like, real world, it takes forever.
We're gonna RWAs. I know, but we can just be a bunch of like douchebags up here talking in acronyms that no one understands, like most financial people. There was actually a period of time in our company where anyone that would use an acronym, they would have to explain it. It's amazing how many people don't even understand the acronyms that they're using. Like the financial industry is terrible for this. I'm not sure why. So yeah, so I'll just go with real world assets. I can't even say it, but RWAs. Yeah. So I mean, there's a lot of talk now of RWAs, real world assets on chain, all the stuff that we've just been talking about. What is the unicorn real world asset? What is the real? I mean, I have my opinion on it, of course, but like I'll save that maybe till a little bit later. What are good? I mean, real estate's kind of been done a lot. But let's go, Nadav. Like, do you see anything at INX from an RWA perspective that's kind of exciting do's, don'ts? Are there any RWAs out there where you would just be like, don't touch that?
A lot of real estate lately. Like we get so many calls about real estate. I don't even know what. Just real estate. And you know, it's a different kind of world, because right now it's the tech companies or the software companies or the Web3 companies that are tokenizing. And these guys, you know, you invest in a startup or in a tech company, you're a risk guy, right? A woman, you want a 10x, you want a 100x, but these real estate guys coming from the real estate side, you know, this is more safe. You know, 10% a year is awesome.
I mean, you're nailing it perfectly. You know, we were been talking about tokenizing real estate for a while. Jamie and I met, 2 years ago almost now? And like when we were first talking about it, you're completely correct. You know, the investors that are coming into this space have a completely different risk parameter, but also what their return expectations are, right? So for us, we're like, okay, you know, 8%, you know, 8 to 10%, mid-teens, and we were like laughed off the stage back then. Now, everyone's like, wow, that 8% sounds pretty good, and we can scale, and there's collateral behind it. And I think this is really gonna force the hand of the regulators in a lot of ways, because, you know, if you're trying to scale, go through it, right, on any of these staking platforms or whatever it might be, it's hard for them to go and see what the product is, what's your due diligence, what's your cash flows, how much collateral do you have. Where in real estate, it's a no-brainer, right? It's your simple due diligence process. So it's something that people can wrap their head around. But at the same time, like right now in the real estate market is probably some of the best buying opportunities we've seen in 40 to 50 years.
Well, you're in San Francisco, so.
Yeah, well, yeah. Well, pretty much all the West Coast. I mean, in San Francisco, what was $900 a square foot's now $200 a square foot. You know, replacement cost on that's probably somewhere around $500 a square foot.
Right. So you're going into these distressed markets. You and your group, you're buying up these. You know, what you were telling me earlier, just offline, there was a $40 million condo that's now worth $8 million.
Yeah, I mean that's the resi side. You can go to the
Right.
commercial side, and it's 80% vacant in some of these non-amenitized buildings, right? No one wants that, and everyone's like, "Oh, you're going to convert it to resi." You ain't going to do that unless you have a 20-foot wall in between each one, right? So it's impossible to do that. What you can do is make it a pretty cool mixed use, but it's expensive to do, right?
So is your plan then to buy up some of these distressed assets from a real estate perspective, tokenize it, and offer the the access to the upside of the asset when it comes to appreciate again down the road? And like when do you think that would be? So say if you had a token available today for a kind of a tranche of San Francisco commercial real estate, like when do you think you will see the owner of that token would see arbitrage?
Profits, yeah.
Yeah.
I mean, it happens in cycles. Obviously, rates aren't helping the situation. There is no debt on deals right now, which is why you're not seeing a lot of things trade. And, you know, I'd say 18 to 24 months before stuff actually starts coming back online. The biggest difference in this cycle and the 08 cycle is people actually start to realize that policymakers matter, right? If you're in these cities where people don't feel safe going into the office, they're not going to do it. So it's really being on the front edge of that and revitalizing the city from the ground up.
You were telling me that when you park your car in front of your office in San Francisco, you're that guy that you see on TikTok that actually has his windows rolled down with a sign and you're saying, there's nothing in here, don't smash and grab, or like you're that guy.
At the end of the day, like, you know, the news definitely doesn't paint a great picture, but they're not lying on most of it. So
Jamie, talk to us about your favorite real world asset, your do or don't real world asset.
It gets back to an earlier point. It's like the best performing asset like that everybody's after right now is private credit. Mm-hmm. And we have an amazing private credit fund from Hamilton Lane that's selling unbelievably and leverages blockchain technology the right way, in my opinion. You can subscribe to it all digitally, but you can also redeem on demand at any point in time by sending the token to an address, and you can redeem and you'll get cash in your account right away. Normally that process for redemption is monthly, it's complicated, there's all sorts of gates and complexity to it. On our platform, it's one click and you get your money back. So
that's the Scope Fund.
That's Scope,
through Hamilton Lane.
Yeah.
And so the answer was private credit. I think that, do you want to maybe just kind of unpack that a tiny little bit more? Because I think that's a really important use case.
Well, I mean, private credit's kind of where most firms now are going to get loans, right? Because banks aren't lending anymore, so you got to get money somewhere. And these large PE shops have tons of capital that they're sitting on. And so it's a natural link to have that. And, in private credit, there's different striations. There's, there is an 8 to 10%, which is easy to get, low risk. There's 15 to 18 kind of, and you can get even higher if you want to go into CLOs. But again, it's fundamentally about the asset and what's underpinning it. And I like, personally, I'm a big fan of funds because I'm not really good at picking winners. My investing days of trying to pick a winning company, I suck. But funds, it's much easier. And so I just think the whole kind of alternatives, private assets is really where the focus is. I think public markets are sufficiently digitized and work pretty well.
Herwig, you have a weekly YouTube video where you talk about all the liquidity in the security token space, all the real world assets. I mean, you are literally on the front lines. It's all coming, through your front door, out the back door. Do or don't real world asset? What are you seeing? What do you like? Like if you were tokenizing a real world asset today, what would it be? Life insurance, what?
It's a great question. So the Security Token Show, what you're talking about, we've been doing it for 4 years, every week, just covering what's happening regulatory, who's coming into the space, who's issuing stuff, what's trading, et cetera. We've seen it go from security tokens, hence our name, to digital securities, to tokenization, to on-chain, and now RWAs, right? OnFi. Personally, I don't even like the word RWAs because at the end of the day, even NFTs and other digital assets, they're pieces of code, and last I checked, code lives in the real world. So to me, it's even more confusing. But I think I'd be willing to bet everybody else is even confused because when we talk about RWAs, we're talking about typically equities, typically products that you're going to invest in. When I think of the retail crypto crowd, and they think of RWAs, they think of centrifuge, they think of credits, they think of, let's call it blockchain first products that are typically not equities because they have a lot of regulation around them. So that means even the RWAs that you see creep up are either international under different regulations because it would never fly in the U.S.
Always like no U.S. investors. I love that one. That's
great.
Everything we're doing is super legal. No U.S. investors.
Permissionless RWAs is an oxymoron to me. So you're going to probably see some bad actors get shut down for that in the future. But I think this RWA trend, that's where most people are looking at, is where can I go on chain and actually lock up my value? Because that's what's going on. RWAs in that sense, they don't trade, folks. That's just people locking up their money. Whereas what we talk about trades, as well as the fact that it's a security. So real estate is the go-to use case, even though I believe everything will one day be on chain. Real estate is so digestible because one, it's not as volatile as traditional equities, right? You get appraisals from Cushman and Wakefield and Deloitte and other people that you can say, you know what? If Ernst & Young says it's worth this much and it's trading 20% below, that's an easy money opportunity that most of the industry would never allow that spread to occur. Whereas, of course, with a lot of stocks and even crypto, you see that volatility. But then on top of the appraisal data, real estate usually comes with yield. So now you can automate that yield. Real estate traditionally, except for whatever ended up into REITs, is typically also illiquid, right? So the private real estate markets, the way they usually get liquidity is refinancing or collateralization. So the traditional way for real estate already doing collateralization, when you add Web3 to that, and you can say, hey, Jamie, you can take your building and go ahead and get a loan immediately like that, that's a major shift in the way people are going to look at that asset.
Yeah, I love that. You're talking about two different things. You're talking about TVL, so total value locked. This is a metric that's very important to blockchains. You're talking about collateralization. What comes up for me when I hear you speak this way is what is happening on the Provenance blockchain, a blockchain that not a lot of people are talking about, that has I think, if my numbers are right, the second highest amount of TVL, total value locked, but it's really because of one collateralized kind of project, which is Figure, which is essentially a digitally native HELOC. And that was, for those of you that know or may not know, this is Mike Cagney, who exited from SoFi, that built this. So I mean, this is a really interesting use case.
I don't want to interrupt you, but since you brought it up, most people don't know that the largest securitization of HELOCs, home equity lines of credit, since the 2008 crisis is by Figure, which is not a bank. I think that's absolutely wild. And by the way, most of the people who are funding or getting these loans, which is funded by Jefferies and JPM and others that worked with Figure, they have no idea that their loan is on chain at all. They just are happy to get great terms.
And purely digitally native, right?
Purely digitally native.
Which is, I mean, as far as use case goes, that's kind of where we were kind of going with this in some ways. You know, what is a real world use case? And HELOCs very specifically, and what Figure is doing, and they're on the Provenance blockchain, and has given them the second highest TVL in the ecosystem. So yeah, it's pretty impressive, and I think Mike Cagney has been building this since 2019. So it's been a long time kind of leading up to this, and what he's about to do next. For those that follow him, keep your eyes out on some of the stuff that he's doing, because I think from a real world asset perspective, from the digitalization, especially doing something with credibility, I think it's really happening. We've got about 13 or so minutes left. I want to hear what's happening in your guys' companies a little bit more specifically. Mitch, kick us off. What's happening at Steelwave?
Yeah, I mean, what Earwig said is exactly the conversations we're having internally. Really, we see this as kind of the future of the private buyout in a lot of ways. And refis are really the biggest thing on the scene. What we are launching, we just got confirmation on Bermuda, so we're doing a $500 million all-cash acquisition fund. We're going to be deploying it over probably the next 6 to 12 months. And we're going to aggregate out that strategy with long-dated leases that are already in place, right? With groups like Netflix, Google, Tesla, things that people resonate with. And then, at the end of the deployment phase, it'll be okay, if you guys want to bring it to secondary market, go for it. And that's where I think it'll start to really hit the ground in the space. We'll be working with the tech groups to figure out who's the power player and what we're doing. But on the real estate side, I mean, it's, again, some of the best investment opportunity I've seen in my life. Steelwave's been around for 40, 50 years. They've been through like 3 or 4 cycles of this.
Your story is actually kind of interesting, because you're like a generation. You're like the digital generation of your family that have kind of passed the torch to you and said, here, digitalize it, son.
So I traded a hedge fund. We traded volatility all through college. So I was on the front edge seeing everything that was coming through the space, the ups, the downs, the good, the bad. And after graduating, I was like, look, the space needs hard assets. They need scalable hard assets. And I went to my father, who's the founder and CEO of Steelwave, and I'm like, hey, let's use this tech to really open up some new markets for you. And
he was supportive of it. Was it a hard sell?
It was not a hard sell for him, but for the rest of the capital team, it was pretty difficult. I mean, these guys, they struggle with computers, in a lot of them, so it's hard to explain blockchain.
So it's really funny, because what Infinia was doing was we're basically digitalizing the life insurance industry, and the biggest technological innovation in life insurance literally was DocuSign, and that was forced by COVID. And it was because when COVID happened, everyone thought they were going to die, and these life insurance companies had this like influx of underwriting of policies. Everyone wanted a life insurance policy, and they were like, we can't get wet ink signatures because FedEx is closed. So we have to use DocuSign. And now I was just at InsurTech in Las Vegas, and there's the whole life insurance industry is bragging about all these technological innovations they've made, and it's literally DocuSign. So good job. Nadav, tell us about INX. What's happening in 2024? What are you excited about?
Yeah, I mean, first 2023. I mean, this year was really awesome, because it took us. I mean, it was only this year that we really went out to the world with our business model, because the first few years was just working with the SEC, building the platform, going public with our F1 prospectus. That took quite a few years with the first security token online. And I mean, this year mostly, from the beginning of the year, we onboarded 7 companies, 7 issuers to raise capital through tokenization on our platform from investors globally and in the US as well, all under US regulation, of course. We actually distributed recently the first dividend on the blockchain. We powered that by issuers on our platform called TruckPal. So that was pretty cool. It was, quick, easy, cost-effective, efficient, and I think one of the I think the interesting part that we're working on is really increasing on liquidity in our second market, kind of asking about 2024. So some of the moves that we did is we have a bunch of interesting companies listing their tokens on our secondary market. Unicoin, of course, is one of them that is going to list. Casper Labs, also the R note from Republic. And just maybe final note about 2023, we spoke, talking about Republic, we struck a very strategic partnership with them, where together we'll be able to really offer this end-to-end solution for what we like to call democratizing the investment landscape. So any kind of company, if it's seed or if it's pre-IPO, can come and get investment from retail investors, all the way to institutional investors, and then we can tokenize that and have a liquid market to trade. So end-to-end private markets. Yeah.
That's exciting. It's great to see that your business is moving forward in the right direction. Jamie, what's exciting at Securitize?
I mean, for us, it's really been working with these large asset managers to expand kind of access and reach. I think the biggest problem we had in the early days was just bad assets. There was nothing good to buy. And now you have really high quality product coming to market. It drives demand, it drives volume and trading, it does all of that. For us, we're going to be expanding that significantly, our work with different asset managers, and bringing a lot more products on chain. But then additionally, we have a license now in Europe as a broker-dealer. And in Europe, we're not required to use an off-chain copy. It's all on-chain. And it's a pretty cool kind of trading environment. So we'll have a euros and a US dollar marketplace where you'll be able to trade the best assets from the best kind of asset managers on the planet.
Awesome. Herwig, what's up at STG?
I'm going to tell you, but you've been doing such a great job moderating, Cole. We got to hear about Infinio. Come on, take it away. Tell us. Tell the audience.
This is his normal job. He's much better at this.
All right, I feel like I'm in the hot seat now.
Yeah, you're in the hot seat.
All right, yeah, good. So yeah, thanks for that. So it's funny because we're talking about real world assets, and and I don't know if you guys heard me cough and kind of laugh and kind of say life insurance. Right? So yeah, I mean, I think the world's best real-world asset to digitalize is life insurance. And if you think about blockchain use case, it's a hand-in-glove, very bespoke, non-fungible conversation to be able to have between what is the most important asset in the world and how do you deliver that at scale. So I believe the most important asset in the world is something that leverages and monetizes and valuates the most important thing in the world, which is a human life. And people go, well, how do you measure that? And I kind of go, life insurance. It's existed literally for 200 years, and there's cash components to it. And even if you think about what Mike Cagney has done at Figure, if you just remove the HELOC and replace it with a life insurance contract, it's way less risk. So I'm coming up with these ideas and these thoughts 5 years ago about how to deliver something very sound, and the token will be called sound, how to deliver a very sound financial asset to the market. And I realized, well, it's tokenization, digitalization of life insurance. So yeah, I mean, I'm pretty passionate about it. I've written books on the subject, but it's so interesting though. Like when I walk into a room and people go, what do you do? If life insurance even comes out of my mouth, I clear the room. I'm surprised you guys are even sitting here right now. But then as soon as I talk about, say, blockchain or crypto, all of a sudden I'm like one of the more interesting people in the room. So it's been this real juxtaposition of trying to, bridge what I feel is the most important asset in the world and this kind of technology. So Herwig, thanks for asking. That was a really good question.
A really passionate answer. I love that.
Oh, man. Wait, so I wrote a book a little while ago called Child Millionaire. And the premise is that if every child in America was life insured for 4 generations, there would be no consumer debt. But the problem is the friction of getting every child insured. Blockchain actually solves this. Blockchain actually gets the child, so if you took out $100 of premium per month for 20 years, for 4 generations, America could be out of debt. I mean, this is like a hyperbolic thing. I mean, this is obviously like a pie in the sky, not realistic. But when I came to this realization, and actually our chief economist, Dr. Robert Murphy, he actually vetted this out, and he goes, yeah, cool, this is actually a thing. You could actually do this. I realized, okay, I mean, we gotta, and actually managed to get him to quit his job at New York University to come and work for us full time. So it's a little point of credibility there. You should not have opened up this can of worms.
I
with me.
did.
Yeah.
You got still 5 more minutes to kill for me.
I got 5.
No, it's a great example. It's a great example of tokenization, fractionalization. It's very similar to real estate in a sense that you've got a hard asset, it's valued, there's a cash component, and this is the future. How else do you can get a life insurance yourself? Or what, I go buy Northwestern Mutual? Like, how else can I get exposure to this asset class without something like that? So I think it's a great use case. It's something we look forward to tracking over at Security Token Market, which is what we do. We mostly just try to cover the industry in terms of whatever's trading out there, where's the price, what blockchain it's using. We're the go-to place to be able to figure that out. And hopefully we will remain that for you. So our focus right now is research. It's continuing to have coverage across everything that's happening. This isn't just one or a couple different markets, right? This is a global movement. This is all kinds of different assets, all kinds of different instruments and structures. So it's extremely complicated to try and organize and standardize and make it easy to put out there for the world to digest. Because that is, unlike issuers or unlike the infrastructure, we're media, we're data, we're here to help educate and advocate for this stuff. So that's our focus. We have tokenized this in April, which is our conference in Miami. So I hope to see you all there. Yeah, please, anyone who's in this space, reach out to me. I'd love to learn what you're working on.
That's amazing. And just as we kind of wrap up, one of the last 3.5 minutes I want to talk about is liquidity really quickly.
Can of worms, right?
Yeah, it's a can of worms. Let's talk about, Nadav, do you want to just take a minute and talk about liquidity in the secondary market for security tokens?
Yeah, sure. I mean, it's one of the challenges in the market, but as well as education, by the way. So it's amazing what you're doing because, I mean, we actually had to write a book this year, INX did, the INX way, just because all the time we're just on the phone educating, asking questions, and it's important for the company, but also for the industry as well. Liquidity is a challenge, and I don't want to kind of reiterate it, but basically that's our plan for 2024. And what I've mentioned about Republic and Unicoin and Casper Lab, there's a bunch of others that we cannot mention yet, but really just getting the right companies on our platform, tokenize them, getting, only these 3 tokens will bring tens of thousands of token holders, of investors, of potential retail investors that are really rooting for that company on board on the platform. So that's amazing. And I think the second aspect of it is finding those companies, and this is up to all of us, and getting them to become the next Republic, to become the next Casper Labs and Unicoin, helping them raise the capital, helping them create that right community, like some of us did and INX did, and the right community behind them, and then issue new great tokens to the market.
I mean, I think it's liquidity begets liquidity, which means basically you need a good product that people understand that they want to or need to trade. I think in the kind of alts market, there's a ton of secondary funds, and all they do is trade all day long. They go, they buy LP positions, they buy them out, they do these things. That's going to happen on the digital platforms. It's much easier to do. Instead of lawyers and paperwork, it's a couple of clicks. So we're big fans of really high quality product that what's in it, and then people will trade it because they know the actual values, and they're tracked by lots of firms. So that's where I think we'll start to see it. I think the market, because of the J curve and what happens, you're talking about 2 to 3 years to see any sort of liquidity, unless it's desperate that somebody has to get out of a position for some reason. So we're years out, but it's building. I mean, we have one product, Blockchain Capital, that trades similar, like 20% of its market cap. So it's pretty similar to like a real NASDAQ stock, but that's like one in thousands that are out there.
Yeah, we appreciate the candor. Okay, Herwig, take us home.
I'd love to. So actually, I'm going to give credit to Mark Yusko because I was just having lunch with him, and he said it best. We were talking about this exact thing, which he made some comment I probably had never seen Field of Dreams, which he was right. But everybody knows the saying, which is, of course, if you build it, they will come. This is not the case for RWAs and tokenization. It's usually the case for most things. Marketplaces are extremely tough to build. Seems like, or maybe just most people didn't realize that Mt. Gox wasn't all too long ago, and that was pretty much the only place you could buy Bitcoin. So markets grow, markets evolve, products improve, and you'll start to see this liquidity come through. But I think we've been saying it all panel long, which is just because you tokenize it doesn't mean you suddenly have a market behind it. There are other mechanics that go into liquidity. And again, these are the amazing partners and ATSs that you can use to help improve your liquidity, to enable for the first time ever to trade a private company, for example. That's unheard of to most people. It's either you gotta wait 5 or 8 years or some kind of special transaction or financing event to get out. Now, suddenly, for the first time ever, you actually can go to a website and list your security. I think that is the future. That's why everything is going to move on chain. All trillions, which is, I guess, the name of this panel, multiple tens or hundreds of trillions of assets, equities, debt, it's all coming on chain.
We're going to wrap it there. I appreciate all you guys for being here. I will say in any industry, there's a time to compete and there's a time to collaborate. We are in the season of collaboration right now. So all of you in this room, collaborate with somebody, build something, find a real world asset. Let's get it on chain and let's get some secondary market to help some people.
Thank you.